Well, thanks for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities, and I'm going to be joined by Brian Hoops, president of Midwest Market Solutions. He's based in Springfield, Missouri, and he joins us right now. And Brian, right off the top, I want to go to some breaking news that we had just a moment ago. USDA said we had some overnight export sales business. It's been kind of lacking here lately, but if you recall, last week, China was on their, what do they call it, their Golden Week holiday, I believe. So maybe they're back in there. Let's see what we have for the overnight export sales this time around. So what we have is 330,000 tons of soybeans sold to China. How about that? They're back in there. And we had a sale of soybeans in the amount of 198,000 tons to quote-unquote unknown destinations. Could be China, could not be. We have corn, 161,544 tons to unknown destinations. Now, that's a very specific total. Usually when China buys something, it's always a round number. Not always, but that makes you wonder who is in there buying that one. So, Brian, overall, what do you think about those numbers this morning?
Hey, good morning, Marlon. It's great to see some export business pick up after kind of an ugly day yesterday where corn and soybeans were under a lot of pressure from the supply and demand report. We're starting to see some end users come in and buy the market, buying the futures contracts in an attempt to gain control of the product through the delivery process, and also because we're starting to see a little bit of export business. Now, we need to see more business in addition to what we have just seen. Our export sales are far, far behind what we have seen a year ago. So we really have a completely different structured market compared to last year. Whereas a year ago, there was no carry in soybeans. In fact, there was a big premium to sell your beans right off the combine. This year, it's a complete opposite. There's a large carry being offered right now into the deferred contracts to store your crop. And that is a direct sign that our demand has not been nearly as strong as what it was a year ago. So this is hopefully the first sign of additional demand creeping back into the marketplace.
Well, I wanted to ask you, we had some consumer price index or CPI data that just came out a little bit ago. Is that going to be any kind of a market factor in the ag trade or not?
You know, I think on a long-term factor it is, but in the short term, probably not. We're more likely going to be focused on this export market. That's a good sign. One of the things the market's really going to be focused on. Harvest pace probably going to slow down just a little bit this week, and the market's really trying to pry some of this grain loose from the farmers. Watching basis levels, that's going to be one of the keys going through the fall months. As if basis levels remain tight and move higher, the futures market is likely to follow, and that is going to be, as I said, one of the key components to give us a rise in our futures this fall because of demand trends. Now, we're also watching winter wheat plains closely this week. We're about 60% planted, or almost 2/3 of the crop is in the ground. Cooler temperatures and rain in the forecast will be just nearly ideal to get that wheat crop off to a really good start.
Okay, Brian, I wanted to ask you, how reliant is U.S. agriculture and the future of U.S. agriculture on what happens with China?
Well, yeah, you know, we saw just a boom in our export markets because of the trade agreement that President Trump had worked out with China. They have been massive buyers during the first initial years or the first phase, but they have slowed their purchases dramatically in the last 6 to 12 months. They're about $5 billion behind where they should be to meet their commitments. And the question will be is, can we hold them accountable for that? Because they are number one source of buyers of corn and soybeans for our country.
All right, let's look at our overnight trade here then, just to get up to speed on what's going on heading into the daytime session. And on the corn market overnight, a little bit weaker here, Brian. We had December down 2 3/4 cents. We were at 5.19 3/4 per bushel with our quotes provided by Bar Chart. November soybeans 6 higher at 12.04 1/4. And if we move on to the wheat market that you were just referring to, we had December Chicago wheat down 3.5 at 7.30 1/2 per bushel. In the Kansas City market, You had the December down 6 at 7.33 3/4 per bushel. And in Minneapolis spring wheat, December down 2 1/4 at 9.52 3/4. We had the cotton market showing December 160 points lower at 104.78. And of course, a lot of folks watching what's going on with that oats market. It was down 20 cents on December overnight, and it was at 6.28 per bushel, a big decline this time. We'll come back and take a look at the setup for our livestock trade in just a moment. Let's talk a little livestock trade now and go back to Brian Hoops and see what he thinks about the setup for today's trade. Well, on our livestock summary from yesterday, Brian, there really wasn't much to talk about when it came to the cash cattle trade. Looks like maybe just a handful of sales around that 124 mark. I didn't see any dress sales. So do you think they're going to hold off until maybe later today or tomorrow?
It certainly appears that way, Marlon. Last week, Packers were in a big hurry to buy some cattle. They were buying 124 being traded in Kansas on a Monday. And this week, we're looking at Wednesday morning, and we're not seeing hardly any trade at this point. We did see, as you said, some very light trade at 124, fully steady with a week ago. But really, you don't see any Packer bids being offered on a dress basis, live basis. And so I think they are waiting until later in the week. The cutout values continue to weaken here. That's probably going to be a drag on the futures market that is going to look at the cash markets not being very strong this week and probably needing to pull back. We saw October pull back yesterday as it was priced in a dollar rally in the cash markets, and that has not occurred yet. And so we're starting to see a little bit of weakness, and I think you do see a little bit more follow-through weakness in the early trade on the opening bell this morning.
So choice, we're down a nickel yesterday, if we can bring that graphic back up here again, and the selects were down 2.29. On the pork side, on the pork cutouts, something really caught my attention. Now the carcass values were down 5.63. Everything was down. And look at the hams, down 10.79 yesterday at 57.67. I looked at the price a week ago. It was 93.57, Brian. That's quite a drop.
That's a huge drop, and we're going to stimulate a lot of demand for ham markets with that type of price drop. If we see that at the retail level, you can really expect as we go into the Thanksgiving timeframe, a lot of ham is going to be served, and that, as I said, stimulate a lot of demand, but it's also stimulating a lot of technical selling with big carcass drops like we saw yesterday.
On the lean hogs yesterday, we wrapped up with December down $2 at 78.17. That was a big drop yesterday. On the live cattle, we finished up with December down 92 cents yesterday at 129.25. And on the feeders yesterday, well, we had the November contract 7 cents higher, is all at 161.80. The deferreds were a little stronger, 60 to 70 higher. That'll set the stage for today's trade. Thanks, Brian, for all the help. Brian Hoops, Midwest Market Solutions. Janet, we're about ready to kick this thing off.